That will be discussed under syllabus 13. How you are going to identify the principal market and most advantageous market. If you don't have principal market, you have to go to the most advantageous market to get the fair value. Right? To get the fair value, you don't want to consider transport cost. To identify the principal market, you have to consider transport cost. Those are very tricky questions. We'll discuss later once you are discussing SFRS 13, right? Then just I am telling just words. I am telling once you are getting fair value, you are having active market, consent, principal market, and then most advantageous market. So if you don't have active market, you can go to principal market. If you don't have principal market, you can go to the most advantageous market to get the fair value. Right? We'll discuss what it is at the discussion of SLFRS 13. But you should know these are the things you can, other steps you can follow to measure this fair value. First is quoted price, identical price in the active market. If you don't have market determined price or value, so then for that you can get sector benchmarks, market price for similar asset, the most recent market transaction price. Those can be used. Right? And then if you don't have that, what you have to do? Then you can do discounted cash flow, expected cash flow, market rate, any step value. First, if you have this, you can do that. Right? If you don't have that, you can't, calculate future cash flows. You can't get interest rate. We don't have the step value amount. What you have to do? The third one. Now you have incurred a cost. You have presumption that cost equal to the fair value. Based on that, whatever the incurred cost you can consider as the fair value. Right? I will show some of the annual reports, they consider this as assumption. As auditor, how we are going to audit this? The advanced audit. So the assumption they have taken cost equal to fair value. That's a very difficult area to audit. That is the area you need to justify as auditor. Management feels like cost equal to the fair value. They have a presumption. Based on that, they keep cost as a fair value. Right? Then, as auditor, what you have to do? You have to audit that assumption. So once you are auditing that assumption, if you feel like no, cost way away from the fair value, there's a material gap between fair value and the cost. You have to do the fair valuation, and this is the gap. As auditor, you have to tell it. So then, it's very serious discussion as a manager with the management. How we are going to disclose this assumption in the books as auditor, how we can justify that same assumption. It's a very difficult question. So then if you are the accountant in a company, if you are going to disclose this statement, be careful. Auditor may request, what's the justification? You have to justify that cost equal to fair value. Because of that, we are using cost as the fair value. Okay. Keep in mind. So then this one, discounted cash flow. Then wow. You have that bearer plant. So bearer animal, let's say, in a poultry farm, you have parent birds. Parent birds, you can calculate the cash flow pattern, right? Accordingly, we do the fair value calculation. I will show that one of calculation. What we have to do is we have that lifespan of a bird. Lifespan of a bird like 27 weeks. We have a chick here. 27 week immature bird. Immature bird. So after 27 weeks, this bird will lay eggs. So the egg pattern may be like this. Egg pattern may be like this. So then the bird will lay egg 27 weeks. She's coming to the peak state like 34 weeks. Right? After 34 weeks till 54 weeks, the kind of a decline stage. Right? So then you can get the egg pattern. Egg pattern. Egg pattern means first week this bird will lay 2 eggs. Second week 3 eggs. Fourth week 4 eggs. 34 week 7 eggs. Each and every day she is laying eggs. Right? So that's called egg pattern. Egg pattern. So then, how much of a market price of an egg? Vary, right? 23 to 50. So then, maybe 50, maybe 23. So then, egg price into egg pattern, future economic benefit, right? Future economic benefit. And then, after the 54 weeks, there's a residual value of the bird. What is that? What's that? Curry chicken. After taking curry chicken, boiled chicken, curry chicken කියන්නේ අර එක් දාලා boiled birds ලා දාලා නාකි වෙන birds ලගේ meat තමයි curry chicken කියන්නේ. ඒවයි කටු වැඩි. Heavy with the bones. Curry chicken, right? එතකොට curry chicken value එක තමයි residual value කියන්නේ. ඒතකොට එක් දාලා ඉන්න bird කෙනෙක්ගේ අන්තිමට කිලෝ 3ක් විතර තියෙනවා. කිලෝ 3ක් තියෙන bird කිලෝ එකක් curry chicken boiled chicken වලට වඩා අඩුයි. Kilo එකක් let's say 750 to 3 is the residual value of the parent bird. Parent birds live 54 weeks. 27 weeks, no eggs, no cash inflow. After 27 weeks, we are getting eggs. End of the 54 weeks, we are getting residual value. All those are cash inflows. These cash inflows should be cross-checked with the cash outflows. The net value we can consider as net cash flow. Net cash flow should be discounted by using the interest rate. That may be the yield value of the farm. That should be discounted and need to get a value to the balance sheet. That is called fair value. Fair value. That fair value should be deducted. The cost to sale should be deducted from that fair value. That is called fair value less cost to sale. That is called discounted cash flow method. Expected cash flows, market rate, any scrap value. That's the way you have to use. That's a mechanism you should follow. So as an accountant, we have to use appropriate assumption inputs for this type of valuation. Each and every bird should be captured to this model. Right? So then how can develop that type of a model? By using Excel or by using a system. You are putting age, mortality, hatchability, and some other criteria, chick prices, market egg prices, and then curry chicken prices. All those things should be included to the system, and you can get the fair value. That inputs we call as unobservable inputs. Accordingly, this mechanism, we can say that level 3 valuation, because most of the inputs are unobservable in the market. Because of that, we should give extensive disclosures in the financial statement, like sensitivity analysis. If tick price change 1%, how much it will affect to the profitability? That type of sensitivity analysis should be given in this financial statement. Keep in mind, if we have more unobservable inputs, level 3 valuation, right? We are using discounted cash flow method. So here we are discussing what are the methods we can use to fair value, get the fair value, right? In detail, you can do this in syllabus 13, don't worry. I wanted to touch upon the syllabus 13, not all aspects. So then if you are learning, once you are learning in syllabus 13, I can go back to this standard and link with this. Then you can have proper understanding. Now just have kind of a basic understanding. To get the fair value, we have different methods, simple, that will be discussed under syllabus 13. How you are going to get this? We just learn that kind of a fair value model, kind of a basic market value mechanism, cost approximation mechanism. For the discuss, what we discuss in detail under syllabus 13, right? We couldn't complete one standard yet. We have the government grants as well. Then we need to complete this. First day onwards, then happy. Again, bad Kunak, Panakia, operate reporting Panakian, Hina, Mukut, the Adana Pota, Liver. Mama didn't absolutely and Sucha no. Mama the Hill is not brilliant. And Pekapara. Ready no. Minimum consultation should be done from your own. Then the patient is doing the classroom, right? Here we are discussing analytical asset agricultural produce under measurement method, fair value less cost to sell. Again, fair value less cost to sell. Whatever the agricultural produce, analytical asset, same method. Fair value less cost to sell. Fair value less cost to sell, right? Then fair value less cost to sell. Once you are doing that measurement, if there's a gain or loss, that should be transferred to P&L. That should be transferred to P&L. Whatever the gain or loss, it's a P&L item, not a other comprehensive statement item. Right? P&L item. Again, here you may have tax-related treatment. Deferred tax treatment may be there. Right? This fair value gain or loss. Fair value gain or loss may not be considered as an allowable deduction or